Welcome on board, Sudipta.
Thanks, Harish. It's a pleasure to be here, and good evening to everyone who has joined on the call.
Thank you. Thank you. So, Sudipta, I think what everybody wants to hear from you, and ICICI, given the size and the quantum of work you're doing and a lot of innovation you are doing, I think everybody's eager to understand from you how you have done and how you have scaled the business. So, I think very, very crucial right now for us to understand from a credit card perspective, how have you grown so much in this period, right? I think 3x in 5 years is phenomenal. So what does it take to reach that scale? How do you see the future? I think broadly as an industry leader, we want to hear from you.
Thanks, Amir. The fact is that one advantage that we have inside the bank is that we have a large amount of our own liabilities customers. So that's the first port of call for us. So what we have done is that over the last couple of years, I think it's an exercise that started about 4 or 5 years back, where we actually reworked our entire credit approach process and used a lot of new age algorithms, including a lot of machine learning based algorithms, pre-approved processes that and focused on pre-approving as many customers as possible. Obviously, one of the focus was that give the customers the cards very, very fast, especially existing customers, and for whom we had the full KYC. And we were probably the first issuer who started with the 30-second issuance of our card on our internet platform, as well as on iMobile. So obviously that was the first thrust, which was use our existing data and use our existing use cutting edge credit models to make sure that the issuance becomes much faster. The second thing obviously is we figured out that there's a large section of customers who are outside the bank, and we need to sort of partner with good solid co-brand partners to funnel in those new to bank customers into the bank. And to offer more successful partnerships, obviously one partnership is probably one of the exemplary success case in the market, which is our Amazon program. And the second is our Make My Trip program as well, right? And both of these programs, using the large digital prowess and the large digitally acquired customer base of both these partners, we are able to funnel in a lot of customers that are very relatively low acquisition cost into the bank, and they're new to bank customers. We also tend to use some amount of partner insights, what we call, which can be in the form of a score or which can be in the form of a flag, which we built together after doing an extensive data room exercise with these partners, and actually go into a decision and help us tighten the entire credit decision process by putting in this partner. So that is the second thing. The last thing is that we have taken every process digital. We do not really acquire physical cards anymore. So the friction, whether the particular application comes from our branches, or whether it comes from our DSA channels, or it comes online, everything is fully digital. So the friction has reduced a lot. So customers know that if they come to the bank, they will probably get the card in 2, 3, 4 days, as opposed to the original, when we started issuing cards, in the early 2000s, where it could take anywhere between 2 to 3 weeks for you to get a physical plastic. So the timelines have also been crashed, which has actually led to a larger amount of issuance within the short possible time. So yes, growing the portfolio by that level in a short period of time is in a risk-free manner, right, is the most important part. And to a certain extent, it has been tested by the huge COVID disruption that we went for 2 years. So overall, it's a model that has worked well, and we are continuing to improve on the model.
Fantastic. I think this is how I think the last point was very crucial, which is how do you do risk-free, right? I think otherwise we'll have different problems to solve, and we'll be back to the square one, right? I think we have seen a lot of people going down, but I think interesting part is that credit card is, irrespective of the issuer, has done really well, and of course you have done even better, right? Now coming back to there's also a discussion around UPI being used as a sort of universal. I would say from a usage perspective, it will make the cards universal, right? So how do you see the market progressing? How do you see that merchants and customers will adapt to it? And of course, there's the issue that today, right now, have only one player network coming in. So how do you see the market growing with other networks potentially coming in?
So I think this is another watershed moment and an experiment without parallel in the world, because here we are moving into, see, UPI obviously is a well-established payment method, and it's sort of, I would call, the locomotive of payments in India. But and to this locomotive, we are hitching the entire credit card business now, right? So till now, obviously, you could use credit cards only at places, either you could use it online or you could use it places which have terminals. But the enablement of RuPay on UPI actually helps us. Though we know we had a Bharat QR solution, which was just launched post demonetization. But unfortunately, the Bharat QR solution on which both Amex, Visa, Mastercard, and RuPay are actually enabled failed to scale. So now that and UPI is far more mainstream, we do believe that with RuPay, this thing will scale very fast. Obviously, the industry also has to put in that amount of issuance in the market to make sure that everyone has a plastic or a line of credit on RuPay to use. And what we believe is that this will scale very fast. We will see issuance picking up very fast, and then we will see transactions at point of sale will scale very fast. And this is actually very good. And from a revenue perspective of the industry, this is very good, because if you can see the normal UPI transactions are very revenue anemic. They do not generate a lot of revenues either for the banks, neither they do it for the payment service and PSPs as well. So I do believe that when a large amount of volume actually shifts to credit, because on credit we'll be able to give reward points on UPI transactions, etc. There's a large amount of customer shift that we foresee that will happen from using their bank accounts to pay through UPI and then to credit cards, which augurs well for the credit cards balance build, as well as the revenue will coming back into the ecosystem, both for the banks as well as for the payment service providers and the payment sort of apps. And this overall will sort of lead to a more healthy, revenue sort of revenue recognizing ecosystem. So, whole, I do believe that it's a fantastic move and a move in the positive direction. But however, I do believe that there should be more competition as well. So I would like to sort of see, Bharat QR also sort of trying to, see gain some more currency in the market, wherein, if the other networks also sort of invest behind, again, re-energizing Bharat QR, then we will have a good amount of competition in the market between, the UPI QR format as well as the Bharat QR format. And in the end, the merchants and the consumers will win.
Fair. Now, in terms of credit cards are normally thought about only as a very premium product, right? And on the other side, the way fintechs have operated, they have sort of opened a box of buy now, pay later kind of product as well. And of course, short-term products. So there's a lot of market needs. Now, within this structure, do you see the cards moving towards not so elite, maybe mass segment? Today, we are sending almost 8 crore cards. Do we see a 25-30 crores of cards getting issued over next 3 to 5 years as maybe the customer, the issuers migrate to slightly mass market, given that the customer is already aware of it and willing to use it, right? So any thoughts on that?
Yeah, so Samir, most people don't understand. Most people think credit card is a technology product or credit card is a payment product. But the way we look at it, traditionally look at it within banks, is a risk plus payment product combined, right? So we would love to issue more credit cards, but the problem is that we also would love to our money to come back because we have a shareholder return to make. Given given those sort of realities in play, obviously the industry has been slow to sort of accelerate. I understand that there has been a lot of interest from the fintech community in this particular product, and given some of the enabling RBI guidelines over the past couple of months, we believe that this industry will continue to grow and we will see more assisted. I call it assisted issuing. That means banks taking assistance from smart fintechs to sort of turbocharge their issuance process. So we will see more assisted issuing starting to happen. And as more assisted issuing starts to happen, and as we get into more smarter underwriting models, and as people, obviously, a lot of Indians are now actually quite aware of the credit bureaus and the importance of maintaining a clean bureau score. As that sort of snowballs, much more as like sort of OKN or and other platforms come alive, account aggregator platform matures. I do believe that over the next 3 to 4 years, the cost of issuance will fall, the cost of digital issuance will fall, and that will lead to massive issuance volumes going forward. Given the fact that video KYC is now a reality, and almost 80% of the cards issued, for example, in one of our programs, come through video KYC, which leads to a much lower cost and a much faster turnaround to customers. So as the entire digital stack matures and as the digital stacks become far more solid from a risk as well as operations perspective, this number will grow. So, today we are at about 8 crore, 7.5 crore to 8 crore, touching 8 crore cards. So that number can easily double or probably go about 250, triple in a short period of time, maybe in another 3-4 years time. But risk is our middle name. Let us not forget that. You take the eyeball of the eye of the risk, and then all of us pay a very heavy price.
No, I totally get that. I think we've seen the rise and fall of entities just because of that, right? I think the greed or maybe aggression maybe sometimes causes pain, but I'm sure we have right now a very matured ecosystem where people know where to take risk on, and I'm seeing that evolvement even more as we work with both fintech and banking background guys. They're all focused on ensuring that it's a sustainable growth. Maybe the last question from my perspective is that when technically when people try to work with banks, the API and the tech architecture is something which is very crucial. So I think I wanted to hear from you your opinion how the tech can actually be a big enabler. And since you are leading so much of business which is powered by tech, and you spoke about some of the pieces as well. So how do you see the tech platforms evolving, and where is the gap? Where do you think people like Hyperfest can come in and solve for it? Right? What do you see is the pain, and where do you see it all evolving?
See, Samir, when we run cards business, we look at it on three or four main buckets. So obviously, one bucket is a pre-issuance bucket where you acquire the customer and then you onboard the customer into the platform. The next part is the account management platform. The account management platform, obviously, you have a large driving spends, and you have a large portfolio management where you are doing balance build, right? And the last part is obviously the risk management platform or the delinquency management platform. If you look at these four things together, I think the first stack, which is basically the issuance stack or the origination stack, that is quite well developed, right? And you have a lot of activity that has gone into it. The real holy grail is the account management platform, because the account management platform has been traditional domain of very large, mainframe type of software providers, right? Wherein, and these are very large complex systems. The fact is that the only thing that I'm worried about, and I tell my team, is that the billing system of a cards business is the holy grail. You cannot screw it up. You screw it up and you'll spend months and months cleaning it up. So, they're what I call, they're very tender systems, right? And you cannot generally touch around them and, touch them, in a jiffy. What you need to do is that you need to build around them, right? And building around them, especially on the sort of balance build side or on the usage side. And, one of those sort of buzzwords is that, try to try to give usage offers at the segment of n equal to 1. Try to fine tune the usage offers, because one of the problems that I have with the industry's approach right now is that the way the industry does usage offers is spray and pray, right? You do alliance offers with one large merchant, you say 10% off, and or you say 15% off, and someone who comes and does not know about it also gets that offer. There is a large part which obviously comes by positive selection, but there's a large leakage also that happens, right? So if you have to use your marketing monies, very judiciously, and if you have to use what I call the financial stimuli, right, to sort of get out a result, both in terms of usage as well as in terms of balance build, you actually have to go to n equal to 1. And this is where, when you want to go to n equal to 1, this is where actually the tech heavy lifting is. And, that is where we have been working for over the last 3-4 years. We have actually put in a couple of systems which is trying to do that. But are we there yet? Yeah, I think we are on that journey, but we are 100% not there yet. So I think that is the area where actually the largest amount of potential lies and the largest amount of ROI for banks lies. And last but not the least, in these days of customer, where we have to be take care of the customers even if they are going through a difficult situation, especially the customers who fall out of their payment discipline. In order to make sure that you are gentle with the customer while you are taking the message to the customer to try to sort of discharge his or her obligations, and you give him or her the tools to make sure that that obligation comes in as smoothly as possible and as nicely as possible. Those days of where you could be obnoxious to customers are gone. You cannot do that anymore. So I think overall technology plays a huge role, and technology will play a huge role in digitizing all parts of our business. A business which was very, very traditional and very, very mainframe dependent is now becoming, faster, API driven, and with much more digital interfaces. This is a journey, Samir, and all the new age platforms, which I call the assisted issuing and the assisted sort of portfolio management platforms, are all welcome. We obviously know that we cannot build and run everything on our own. So we are always in the lookout for the market for people who can give us solutions, smart solutions, cost-effective solutions, and solutions that our customers love. And we are happy to partner with them.
Perfect. Thank you. Thanks, Sudipta. I think that was fast. I think 15 minutes way, I have learned so much, right? I think the best part of organizing the event is I get to hear people like you. So thank you, Sudipta. It was short, but very, very sharp. Thank you. Thank you for joining us.
It's a pleasure. It's always a pleasure to talk to you and your guests. Thank you so much.
Thank you. Thank you. Thank you.